Okay, champs, welcome back to Libertas Trading and welcome to the event preview for ISM Manufacturing on Monday, the 1st of December 2025, coming out at 3 o'clock UK time. So, could be a nice little mover today. Of course, ISM Manufacturing is always important. It's not as important as ISM Services, but it still can be a nice mover on the right numbers. We've obviously had a bit of a data blackout period for the FOMC and for the US due to the government shutdown. So, we've got the FOMC in 10 days. It's on the 10th of December, which is next week. And we're not getting, NFP for October, November until after that. Also CPI. So yeah, really difficult situation for the Fed. They're sort of running blind a little bit. We've got 20 basis points of cuts priced in for the next meeting next week, and which is an 80% chance of a cut. And then for the remainder of next year, so for this year and next year combined, we've got 93 basis points of cuts, so almost four cuts priced in now. So, we could see some moves on this either way. I do prefer dollar upside. I just think that so much is baked in terms of rate cuts. I wouldn't be surprised to see some rate repricing on a massively hawkish beat. But I'd also wouldn't be surprised to see some rate cuts priced in if we do get a more dovish print. But I do prefer dollar upside at the moment in terms of medium-term plays. Now, the issue with this data print is just how mixed it can be in terms of the reactions of the subcomponents. So if we quickly look at the manufacturing PMI, we've got four subcomponents, as everyone probably knows by now. The headline, prices paid, employment, and new orders. So for today's print, we're mainly focused on the employment number and the headline number. But of course, the prices paid and the new orders will be important as well, just not as important. So in an ideal scenario, you want to see all of this come in green or all of this come in red for a trade. So just a quick description on what this sort of chart means. These numbers here are the consensus deviations. So if it's red, it means we missed below consensus. And if it's green, it means we beat above consensus. And then the same here on the min and max deviations. If it's red, we printed below the minimum. And if it's green, we printed above the max. So just to show you, how ISM seems to print, it always tends to be mixed. Mixed numbers, mixed numbers, mixed numbers, nothing burger, mixed numbers, mixed numbers, mixed numbers. Now, the last time we got, really hot, well, it wasn't really hot numbers, but the last time we got all green across the board, we actually saw the dollar fall by 56 pips within the first hour. So, this was due to Liberation Day headlines. If any of you, it seems like years ago now, but that was this year. Going back prior to that, again, mixed numbers, mixed numbers, mixed numbers. So, it can be really difficult to get the right number on this. So let's look at the numbers now. So as we said, we're focused on the employment and the headline number, but of course all four are important, just not equally. In terms of medium-term plays, I do think there's too much priced in for the US dollar cuts or Federal Reserve cuts. So I would prefer to sell the cable on a hawkish print. But yeah, I think dollar yen downside looks really nice at the moment as well, which is why I included that one in there. So just looking at the numbers now. So for the headline number, just a quick one actually, we don't have consensus or min-max expectations for the employment and new orders. So I've had to basically make that one up based on previous numbers. This one's quite simple where we had consensus in the prior on the headline being quite close. I've sort of gone off that one. So that explains these numbers here. So for the headline number, I'll be looking at 46.8 or lower, which would be below the minimum and the lowest since November of 2023. And then for a hawkish reaction, I'll be looking at 51 or higher, which would be above the max, back into expansion, and the highest print since September of 2022, which could both grab some headlines. For the prices paid, I'll be looking at 54.8 or lower, which would still be in expansion territory, but the fifth month in a row of declines, below the minimum and also the lowest since January. And then for a hawkish reaction, I'll be looking at 59.1 or higher, which would be the first rise in the print in 5 months. It'd be above the max and still well into expansion territory. For the important employment figure today, this is what the Fed have focused on, the labour market. I'll be looking at 43.8 or lower, which would wipe out the last 2 months of gains in the employment figure and be, fairly nicely below the previous. And then I'd be looking at 48 or higher, which would be the highest print since January and be the fifth monthly rise in the employment figure. So for new orders, I'll be looking at 46.9 or lower, which is 2.5 below the previous and back below July levels. And then I'll be looking at 51.5 or higher, which is back into expansion and will be the highest since January. So for the expected reaction, I'll be looking for dollar down, yields down, and stocks down, especially if we see prices paid higher on a dovish reaction. My only issue with stocks down is I'm not 100%, I'm 90% sure of the reaction function, but not 100% sure. So I will be sticking to FX plays on the back of this, but this is what I would expect to see, but I wouldn't put my life on it. So yeah, I'll be sticking to FX. And then for a hawkish reaction, I'll be looking at dollar up, yields up, and stocks up, especially if we see prices paid lower, which would of course be a Goldilocks print. So for medium term plays, for a dovish print, I'd be looking at dollar yen shorts. It's usually the best play out of US data, but for medium term plays, it makes a lot of sense as well. We had a hawkish UADA out last night talking up probabilities of a December hike, which has led to the yen being the strongest on the session. Intervention risk will impact bullish sentiment on the pair, and it also looks like we have plenty of room for downside after such bullish price action the last few months. So quickly checking out the dollar yen chart, you can see here, we rejected nicely from that 158 level, and just go into the daily chart. I mean, look at that upside since sort of April time. Absolutely massive. Found some, I guess you call that resistance up there, and found some nice downside. So if we can break that 155, that could be quite nice, or the 154.70. And then sort of moving back down towards maybe 152, 153 if we get a really, really, really bad print. And then for a hawkish number, I'll be looking at cable downside. No surprise there. Anyone who follows my work knows I love selling the pound at the moment. So it won't be supported by immediate price action in equities, but negative sentiment on the day-to-day should support downside in the pair. The pound upside momentum from the budget well and truly run out of steam now, as markets realise that yes, the budget wasn't as bad as it could have been, but also the UK economy still isn't in a great place, and therefore we should expect to continue to see some pound downside. We also had a really nice rejection from the 132.50 resistance levels from October the 10th and October the 14th. So just quickly checking out that one. So it seems like we're clustering around these lows from October the 10th and 14th. And it looks like we found some nice resistance there. Would be good to break down lower. Just head into the daily chart. It is a little bit of a messy one. Technically, there's not too much to talk about on the daily chart. But yeah, we'll be looking for some more downside here. Maybe targeting that 130 level if we do get some solid dollar strength in the week on some good data. So for scalping plays, as I mentioned in the week ahead video, we are entering December now. I do expect liquidity to be fairly decent this week, but we should start to see that decline as we go on towards Christmas. So yeah, just be mindful of your fills and your spreads. So Euro US dollar will be my preferred dovish reaction play with a 12 pip target. And then dollar yen will be my preferred hawkish reaction play with a 20 pip target. We do tend to get some really nice fills from ISM manufacturing when it happens. If you're entering dollar yen and you're getting like a 50 pip fill, then of course 20 pips not going to be your target. But in general, these numbers are based on previous reactions and the sort of numbers we tend to see, the sort of moves we tend to see out of the data. So SPX either way. However, I do prefer sticking to FX on this one, as we spoke about. If we get a stagflationary print with everything print in red but prices paid higher, then we expect stocks to fall. If we get a Goldilocks print with everything printing green but prices paid coming in lower, then we can expect stocks to rise. I'd have a 12-point target if I was trading this one. And then reactions to ISM manufacturing have been mixed in the past, so I'll be keeping risk a little tighter on this one. It's hard to know when to enter, but in general with ISMs, if the print is good enough, the market should move in the right direction. So if all the stars align, I'll be looking at entering within the first 5 to 10 seconds. It's well worth taking your time to digest all the data. There's a lot of it. The amount of times in the past I've rushed into these sorts of numbers when I've just seen the headline print coming in really low, or maybe I've seen the prices, which we were focused on a few years ago, coming in really high. But I really think it's important to take our time, digest the data, and that allows spreads to calm down as well. So good luck. Any questions, give me a shout.